For many organizations, research and development occasionally develops, matures, and commercializes solutions. The front end of research and development traditionally has not been an area that is always closely aligned to an organization's business and strategic objectives. Therefore, it has not produced a continuous and consistent stream of new value-added solutions. The fuzzy front end defines solutions that have high levels of technical and market uncertainty, and are at a low technology readiness level. Three important definitions within the fuzzy front end are: opportunity, what is the business or technology gap that an organization or individual acknowledges between the current situation and an envisioned future in order to capture competitive advantage, respond to a threat, solve a problem, or ameliorate a difficulty. Second, is the idea, the most embryonic form of a new solution or service. It often consists of a high-level view of the problem's preliminary solution identified by the opportunity. Last is concept. Concept is a well-defined form including both a written and a visual description including its primary feature and customer benefits combined with a broad understanding of the technology needed. Many organizations still determine which fuzzy front-end initiatives to fund based solely on business unit or divisional stovepiped or isolated strategies and budgets, fragmented and incomplete assumptions, panic or hype and wishful thinking, and, to a certain extent, the political clout of the initiative's sponsor. This myopic view of the enterprise strategy and the lack of the ability to prioritize investments through a discovery portfolio often means that potentially valuable opportunities, ideas, and concepts are not funded. A major challenge faced by organizations is not necessarily the ability to introduce sustaining innovation, like incremental improvements or slight modifications and upgrades to existing solutions, but rather to implement a manageable and effective mechanism for introducing a repeatable process for the fuzzy front end of innovations. An enterprise with significant outdated business or technology infrastructures will spend its money on shoring up the cracks, resulting in a portfolio of initiatives slanted heavily toward tweaking the current baseline of investments. This approach creates the danger of obsolescence. Conversely, a hyper-competitive pharmaceutical organization may overburden its discovery portfolio with potentially high-risk drug discovery initiatives. A balance between both spectrums must be reached. Since 2000, changing economic conditions, the rise in importance of innovation, and the need for competitive differentiators have permanently altered the expectations of the fuzzy front end. All aspects of research and development have become essential elements to executing the business and strategic objectives and transforming the business. Without the ability and agility to constantly transform the business by creating new and breakthrough solutions, reach new markets and geographies, and rapidly gain first-mover advantage, organizations will have difficulty differentiating their offerings. Innovation and expansion opportunities are critical to growth, driving long-term sustainability and viability. In 1988, 65% of the current organizations listed in the S&P 500 list would have been unrecognizable and unfamiliar entities to most investors. In the next 15 years, 75% of the S&P 500 will be composed of organizations we don't know today. Understanding how to transform the business through investment in the discovery portfolio is one of the primary drivers for growth and sustainability. However, because many innovations in the discovery phase are longer term, and due to the need to produce short-term results in today's economy, management is faced with difficult decisions with respect to resource allocation, management attention, and so on. Managers must decide whether to fund short-term, low-value, incremental projects that have greater predictability from a cost-benefit perspective, or invest in long-term, less certain, transformative, higher-risk investments. The evidence for investing in the discovery portfolio is compelling. Breakthrough products offer the potential for a 5 times or greater improvement in performance combined with a 30% or greater reduction in costs. But failures far exceed successes in innovation, and for risk-averse organizations this presents a challenge to securing sufficient resources for the discovery phase. Every 3,000 unwritten ideas generate 125 written ideas, and only one, on average, leads to commercial success. With the importance and premium valuation that is being placed on innovation, it is interesting to note that according to the 2004 Research and Development Trends forecast conducted by the Industrial Research Institute, more organizations are reducing rather than increasing their research and development spending. And, according to Standard & Poor's Compostat statistics, on average the United States organizations spend about 1.7% of sales dollars on research and development. Internationally based organizations with headquarters located outside of the United States like Japan, Sweden, Finland, and others spend more than twice this amount on research and development. Real options provide a means by which organizations can invest in the discovery investments and limit their exposure. Online-PMO provide a categorization for real options as related to research and development investments that have a medium to high level of technical, like timing to complete, skills required, technical barriers and market items like market demand, distributor or supplier support, probability and speed of acceptance and uncertainty. The three options are: positioning, take into account that an organization knows which markets it wants to serve, but lacks the confidence in the feasibility of the technology. The organization is uncertain about which technology roadmap to follow. Next is scouting. Technology will meet requirements, but there is uncertainty about which market segment will show the greatest uptake. The last option is stepping stone. A high degree of technical and market uncertainty exists in these underserved and niche customer segments. This option is staged and sequenced, and experience is gained as stepping stones to build increased features and functionality. While the categorization of real options helps management frame issues related to risk and uncertainty, the challenge of the discovery portfolio is the fact that innovation can be free-flowing, chaotic, and creative, where aha moments are difficult to predict and nearly impossible to plan. Determining the compliance with the architecture, risks, benefits, total cost of ownership, target customers, and dependencies can be very challenging. Business cases and project plans are difficult to develop as assumptions and expectations are often based on guesswork and are highly unpredictable. If an investment is ready to advance to the next stage, the deliverable from the discovery phase is a concept with an identified customer and market need outlined in a preliminary business case, requesting and justifying further resource requirements to transition to the project phase.